Amazon is scheduled to report quarterly financial results after the stock markets close in the United States on Thursday, May 1st, 2025. A lot of investors are curious if they should buy Amazon stock before the company announces earnings. Of course, Amazon is at the epicenter of the increasing tariffs that President Donald Trump has placed on China. I'll discuss those developments in this video. I'll also answer that question if investors should buy Amazon stock before it announces earnings. I'll share with you what you should look out for from Amazon when it announces those quarterly results, the big picture items that you need to know about that may not be reported in popular media outlets. I'll also share with you my fair value calculation for Amazon stock. I'll share my calculation, my discounted cash flow model, which calculates what I believe is a fair value for Amazon's stock today.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so when Amazon last reported quarterly financial results on February 6, 2025, it reported a 10% increase in revenue to $188 billion. That was compared to $170 billion in the same quarter the prior year. The company also reported operating income of $21.2 billion compared with $13.2 billion in the same quarter last year. So Amazon was experiencing double-digit revenue growth and significantly faster operating income growth. Remember, Amazon is a large, vertically integrated business in that it handles shipping and handling, logistics, and all of the services that sellers on the platform could desire. And so, being that way, it benefits from higher capacity utilization, and it also gets penalized for lower capacity utilization, which is going to be important if you're evaluating Amazon stock right now because of the increasing tariffs. If it should impact its North America segment, which I have highlighted, that segment generated $9.3 billion in operating income in the most recently completed quarter. That's the segment that's most at risk given the increase in tariffs. The large part of sales on Amazon's platform come from third-party sellers, and a large part of those third-party sellers are manufacturing products in China and then selling them in North America. Those products will be exposed to higher tariffs. And so if those suppliers find it challenging to bring in products from outside of China, meaning if they don't have manufacturing facilities that they can use outside of China to avoid the tariffs, they're going to have to pay those higher tariffs, and they're going to have to raise prices on Amazon's website for those products, which is likely going to lead to lower sales for those products, which then will lower sales for Amazon overall. And that's where I talk about lower capacity utilization for Amazon, because there's going to be fewer units sold on the platform because many of the sellers on the platform that are benefiting from those lower cost of goods sold are not going to benefit from that factor starting in this quarter, which they will be reporting on here in this update. So that's the segment that investors need to be concerned about. But overall, if you think about Amazon's operating income, $21 billion of operating income, less than 50% of it from the North America segment, and then about 60% of that North America segment is coming from third-party sellers, which are importing products from China. So back of the envelope math here, I would say about 50% of Amazon's North America segment revenue is at risk here. So about $5 billion of operating profit is at risk here for Amazon directly as a result of the tariffs. Now, that's a rough estimate, so plus or minus $2 billion there. It could be as little as $3 billion. It could be as high as $7 billion that's affected from the tariffs. That's not going to go away anytime soon. even if a deal were to be announced tomorrow, those tariffs that were impacted for the majority of the quarter will already impact Amazon's results here in this upcoming quarter. And that's unfortunate because Amazon's business was performing so well. Operating cash flow increased by 36% to 116 billion for the trailing 12-month period, compared to 85 billion in operating cash flow in the previous trailing 12-month period. As I mentioned, Amazon has been benefiting from increasing capacity utilization. Remember, in 2020 and 2021, the company invested billions of dollars in its logistics and fulfillment network to make sure it can handle all the increasing orders during the pandemic as people spent more time shopping from home. Since then, Amazon hasn't invested too much in that category in fulfillment and logistics. It's just been benefiting from those investments in 2020 and 2021 and having a higher capacity utilization rate as its sales have grown over these last 3 to 4 years. The area Amazon has been investing significantly in is in artificial intelligence, in the data centers optimized for AI, and that's helping its cloud segment accelerate revenue growth. That segment is not as directly exposed to the increase in tariffs. Of course, if there's a recession, or even if businesses are afraid of a recession, they're going to pull back spending in that category, and temporarily that segment can be impacted. But the North America segment I talked about earlier, if tariffs remain in place, that segment is going to be permanently impacted negatively as a result of those tariffs, compared to the AWS segment, which could be temporarily impacted as a result of the tariffs. So this was the guidance that Amazon gave in early February. Net sales were expected to be between 151 and 155 billion, or increase at 7% at the midpoint. I wouldn't be surprised if Amazon's actual net sales come in below this number. I wouldn't be surprised if Amazon's net sales are in the 140 to 145 billion dollar range, much lower than the guidance that Amazon forecasted here for the upcoming quarter, because since Amazon made this forecast, all of those tariffs were announced and consumers became more cautious about spending, and enterprises became more cautious about spending as well. Operating income is forecast to be $16 billion at the midpoint, which would compare to 15.3 billion in the first quarter of 2024. And again, I wouldn't be surprised if operating income is much lower than Amazon's forecast. I wouldn't be surprised if the operating income number is around $12 billion or $13 billion instead of the $16 billion at the midpoint that Amazon has forecasted. Again, because Amazon's business has significant operating leverage. When sales go down by 5%, its operating income goes down by much more than that. And similarly, when sales go up by 5%, its operating income goes up by much more than that. Amazon benefits and is punished by increasing sales or decreasing sales because of that capacity utilization. Its costs are mainly fixed costs. And when you have a business that operates on mainly fixed costs, it has greater operating leverage. So all that being said, my intrinsic value or my fair value calculation for Amazon stock, the price that I think its shares are worth today, is $253. That compares well to its current market price of $172. So investors that are curious, should they buy Amazon stock before earnings or after earnings? I have Amazon stock rated as one of the best stocks to buy in 2025. However, this upcoming earnings release might be the most volatile earnings release of Amazon's business in several years, maybe going back all the way to 2020 during the initial outbreak of the COVID-19 pandemic. So given the much higher than usual risk associated with the upcoming earnings release, I would say it's more prudent for investors to wait until after the earnings release, digest the results, and then make a decision on Amazon stock after those earnings are out. Even though longer term, I think the business is an excellent business. And if you're a risk-tolerant investor, There isn't anything wrong with buying Amazon stock ahead of earnings. I'm just talking about if you're on the fence about, should you buy it before or after, and you're like really on the fence about that decision. I think given the higher risk, it makes sense to wait until after earnings and buy the stock then.
Hey everyone, we've got some exciting news to announce. We launched a private Discord exclusively for our channel members at the VIP Discord tier. It's your backstage pass to ask questions, share insights, and get direct access to me. Don't miss your chance. Limited spots available, so join now.